$40 billion of market value erased in days. 10 months later, he stood at an airport counter with a forged passport. This is the story of a coin that promised it could never fall. It fell. What follows is how and what it cost. By the end, there's a guilty plea, a 15-year sentence, and 16,500 claims in a bankruptcy court. But it starts at an airport. March 23, 2023, Podgorica Airport, Montenegro. Final call for a flight to Dubai. One passenger isn't going to make it past the counter. The passport on the counter says Costa Rica. The face belongs to Do Kwon, one of the most wanted men in crypto. How does a man end up here? Rewind 5 years to a promise about money itself. Do Kwon studied computer science at Stanford. Sharp, fast-talking, and very sure of himself. In 2018, he co-founded Terraform Labs in Singapore. It was 2018. Crypto was crawling out of its first big crash, hungry for a next act. Kwon said he had it. Stable money for the internet. Terraform's flagship product was Terra USD, UST, a digital dollar with no dollars behind it. No bank, no cash reserve. Instead of reserves, UST leaned on an algorithm and a promise. The code would hold the price, always. The mechanism looked elegant on paper. It was also the flaw that would eventually kill it. One UST could always be swapped for $1 worth of a second token, LUNA. Mint one, burn the other. Balance, in theory. If UST slipped under $1, traders could profit by burning it back to scarcity. Demand returns. Peg restored. That was the theory. Then came the growth engine. Anchor protocol. Advertising 19 to 20% a year on parked UST. A rate no savings account ever paid. And advertised 20%. Paid from what? When revenue fell short, Terraform and the Luna Foundation Guard pumped in hundreds of millions. The money listened. By May 2022, roughly 14 of every 19 UST in existence sat inside that one protocol. For months, the system appeared to hold. In May 2021, it blinked, and almost nobody ever learned how close it came. UST slipped off its dollar peg. The algorithm reached for demand that wasn't there. The self-healing system didn't heal, so Kwon went looking for help. Quietly, he reached a secret agreement with a high-frequency trading firm. Buy UST and put the peg back. The firm bought. The peg crawled back to $1. On the charts, it looked like the algorithm had saved itself. And that's exactly the story Kwon told the world. The algorithm did it. The system healed itself. Proof the design worked. Years later, in a federal courtroom, he admitted that story was false. He'd hidden the trading firm's role and sold the rescue as code. But in 2021, investors bought the miracle. Money poured in. UST swelled into one of the largest stablecoins on the planet. At its peak, the ecosystem's tokens were worth tens of billions on paper. Paper, it would turn out, was the operative word. There was a second story holding it all up. A popular Korean payments app called Chai, supposedly settling real purchases on Terra's blockchain. A jury later found investors were misled about that claim. The app's real payment rails were conventional. The blockchain was the brochure. Two stories then. A self-healing dollar and a blockchain running real commerce. Both were holding up a coin worth billions. In the spring of 2022, both stories were about to be tested at the same time. Neither one would survive the exam. May 7th, 2022, a Saturday. Large UST positions started moving and the price wobbled. A fraction of a cent at first. A fraction of a cent is nothing, unless your entire product is the promise of exactly $1. Then it's everything. Depositors saw the wobble, and they did the one thing an algorithmic stablecoin can't survive. They started to doubt it. Screenshots traveled faster than facts. Forums filled with one question: is the peg safe? Every reassurance sounded a little more like a plea. The vault doors opened. Billions in deposits fled anchor within days. Every exit pushed the price a little further off the peg. What happened next took less than a week. Here's the machine that ate $40 billion of market value. To absorb the selling, the system minted oceans of new LUNA. Supply exploded. The price of LUNA collapsed under its own flood. Cheaper LUNA meant weaker backing. Weaker backing meant more panic. More panic meant more minting. A feedback loop with no floor. Engineers call that a death spiral. The people inside it called it their savings. Both were describing the same week. There was no circuit breaker, no closing bell. Crypto trades around the clock, so the spiral ran around the clock too. Within days, UST wasn't a dollar. It was loose change. LUNA fell from real money to fractions of a cent. Added up, and over $40 billion of market value was gone. Erased across the Terra ecosystem in a matter of days. That wasn't one fund's bad week. Devastating losses for investors. The SEC's own words for what the collapse left behind around the world. The shockwave kept rolling for months through crypto funds and lenders that had been leaning on Terra's promise. And the man who built the machine was in Singapore, watching the wreckage. He wouldn't be staying long. The collapse was over. The chase was starting. And it would run through 3 legal systems on 3 continents. September 2022, prosecutors in Seoul issued an arrest warrant over alleged capital markets violations. South Korea invalidated his passport. According to reports, Interpol flagged him worldwide. Kwon's world got smaller with every border that saw the notice. For months, his location was an open question. The answer, when it came, turned out to be the Balkans, Serbia, then Montenegro. March 23, 2023, Podgorica Airport. A Dubai-bound flight, minutes from boarding. We're back where this story started. At the counter, a Costa Rican passport. Officials ran it, forged. In the party's luggage, per the record, Belgian documents, also forged. The Dubai skyline stayed a picture on a departure screen. His next address was a Montenegrin holding cell. A Montenegrin court gave him 4 months for the forged passports. Small sentence, but it froze him in place, in reach of everyone. Then the real fight started. Not about guilt, about geography. Washington wanted him. Seoul wanted him. Montenegro's courts kept changing their mind. 2 governments, 1 prisoner, and a small Balkan court between them. Every new ruling flipped the destination. Washington, Seoul, Washington again. Extradition rulings were issued, appealed, and overturned again and again for the better part of 2 years. December 31st, 2024. New Year's Eve. A plane left Montenegro for New York, and the 2-year fight over his destination was finally over. Destination, the Southern District of New York, where a 9-count superseding indictment was waiting for him. Securities fraud, commodities fraud, wire fraud, market manipulation, money laundering. In January 2025, Kwon pleaded not guilty to all of it, but the criminal case wasn't the first verdict on Terra. A civil jury had already spoken, months before the plane landed. The SEC had charged Kwon and Terraform back in February 2023, while he was still a man without an address. In April 2024, after a 9-day trial, a jury found Kwon and Terraform liable for securities fraud, unanimously in under 2 hours. Then came the bill. Few companies anywhere have ever been handed one quite like it. Terraform consented to a final judgment, $4.47 billion in disgorgement, interest, and penalties. After the verdict, in writing, Kwon agreed to pay $110 million in disgorgement, $14.3 million in interest, and an $80 million civil penalty, $204.3 million in total. Cash, crypto held by the LUNA Foundation Guard, even his tokens, all of it earmarked for the people left holding the bag. Terraform itself filed for Chapter 11 in Delaware and began winding down. The company that promised forever lasted 6 years. Roughly 16,500 victims filed claims in that bankruptcy. Prosecutors later said 16,500 stories. And the trading firm from May 2021, its name finally surfaced in the civil record, attached to a settlement of its own. Tai Mo Shan, a subsidiary of Jump Crypto, paid $123 million to the SEC over those peg support trades. It settled findings that it negligently misled investors about UST's stability, admitting nothing, denying nothing, which left the criminal case with exactly one name on it: the founder, the storyteller, the man from the airport counter. On August 12, 2025, the not guilty plea dissolved. Kwon pleaded guilty to conspiracy and wire fraud. He admitted he'd hidden the trading firm's role in the 2021 rescue and sold it to the world as the algorithm. "What I did was wrong," he told the judge. 7 years of swagger, compressed into 5 quiet words. He agreed to forfeit over $19 million. The plea also carried one more clause, one that pointed back east. December 11th, 2025. Sentencing day. Victims spoke. Prosecutors asked for at least 12 years. The defense asked for 5. Judge Paul Engelmeyer called it fraud on an epic generational scale. Then he handed down the number, 15 years. Credit for time served, including, per reports, the 17 months he'd already spent in Montenegrin custody waiting for a destination. It still isn't over. South Korea's charges are waiting, unresolved. Prosecutors in Seoul still want their own trial. Under the plea deal, U.S. prosecutors won't oppose a transfer once half the sentence is served. The chase may get one more leg. Co-founder Daniel Shin faces his own trial in Seoul over his alleged role. He hasn't been convicted of anything. That case is open. The Delaware estate keeps grinding through 16,500 claims, reviewed, pooled, and paid out under court supervision. The dollar that couldn't fall is gone. The man who sold it has 15 years to think about why. This has been Nitelink.